Philippine-focused economists say our trade surplus is too small relative to that of China's for Trump to pick on. Sentiment has been off risk since Trump got started on his tariff threats. Joining us now here in the studio is Jasper Baylon, analyst of First Resources Management and Securities Corporations. So good to have you with us, Jas. Thank you so much.
Good morning, ma'am. Thanks for having me here.
You know, I speak with equity analysts day in and day out, and they talk about high dividend yield plays amid all the volatility. But I'm then again seeing the yields on the 10-year bonds, and they look kind of attractive at 6.12. So what is the justification for actually doing an equity play and in the high dividend yielding ones?
Well, actually, during these market downturns and uncertainties, we look at stocks with offers high dividend yield, specifically utility stocks and telecommunication, which are more defensive in nature. So I think right now, most utility stocks offers dividends within 5 to 6%. So it is relatively the same within the treasury bonds. And of course, once the economic landscape improves, equities have a price appreciation as well.
Yeah, that's a nuance there. Once the economic environment improves, so it's still, we're holding out there what's going to happen with the Trump trade tariffs and the reciprocal tariffs. So what would be the justification for holding equities at this stage, and what would be the investment horizon?
So right now, the current global trade tariffs by U.S. President Donald Trump may bring inflationary pressure in the U.S., which could potentially affect the U.S. Federal Reserves and spill over to other central banks, including the BSP. So on the positive note, the Create More Act may attract more foreign investments in the country, resulting to a higher foreign inflows, which may benefit our stock market.
Exactly. I mean, every single end of the trading day, I look at whether it's net foreign selling or net foreign buying. It's been iffy. I mean, we hadn't really punched above 6,200. What do you think is going to be that catalyst?
So I think investors are watching the upcoming inflation report tomorrow, which is expected to be below from January's 2.9, as with the median estimate of 2.6%. So once, I think, manageable inflation may result to BSP to continue its monetary policy easing cycle. So that could be a positive catalyst for the market.
So you're holding out for April 3rd, aren't you? That they would cut rates by 25 basis points.
Yeah.
What about the triple R cut? Didn't that matter? I mean, that's like at least 330 billion into the system for banks to loan out. If banks were loaning out, because most of them were trying to go for the low yielding ones, but the low return but low risk.
So I think the RRR may boost the economy, as well as it could put more liquidity to banks and capital for the banks to lend money to their lenders. Which could result to higher household consumption as well.
Okay, we have about a minute to go. What is your assessment so far of the local earnings season? As you mentioned, banks.
Yeah, we saw that banks released their earnings season, which is in line with the expectation. So we are optimistic that the profitability of banks may be sustainable all throughout the year due to the current high interest rate environment. All
right, let's keep our spirits up then, because the markets are pretty volatile at this stage, but it also helps that we have someone speaking about it positively. Thank you, Jasper.
Thank you,
Matthew.
Thanks for having me here.
Joining us here from First Resources Management and Securities Corporation.